A very important week in the market. We have not only midterms on Tuesday, but also CPI data comes out on Thursday. If you remember from last CPI day, this was October 13th. We had the 5th largest intraday reversal on the S&P 500 ever. So quite the day last time we had CPI. And going into this one, it seems like a lot of people are pretty under hedged in terms of the VIX, which I will reference in this video today. So there is some very pivotal data that can come out this week. You're going to want to watch that potential for a lot of volatility. But going into the video today, we did have this great initial rejection straight off of the COVID trend line. If you don't remember, this is the line that connects to the COVID low. We rejected straight off of this, so very hard rejection there. And as long as we stay under, then the market is subject to more chop and also potential downside, especially if this level over here that connects to the current yearly low breaks below. If we break below this, there is a potential for a lot more further downside, at least to around like 360, 365 or so. So that would be a very nice downside move from there. But again, if you are bullish and want to be bullish, at least for the end of the year or towards the end of the year, you want to see this level break. If this doesn't break, then you're just going to see either chop, kind of like we have been seeing the last couple of weeks, or further downside and we test the yearly low. So again, you do want to see us get back above this if you are bullish. I cannot stress that enough. So do mark this level on your charts. This is the one, just for referencing here, this is the one that connects to that COVID low right here. Drag it across to this the previous yearly low, and you do get that level over there. Lots to talk about today. We do have a head and shoulders pattern that has appeared on the hourly chart for SPX, so I am monitoring this one. If we did get above roughly 3,880 on SPX, this would negate the current head and shoulders pattern, but as long as we stay above, as of now, it looks like the right shoulder is forming on it, and this could lead to potential downside, at least to around this box over here that I have. So this is something that I'm watching personally. And again, this 3,880 level actually coincides with the COVID level, or roughly around there, this COVID line. So this is a perfect kind of like risk perception, perfect risk level to watch if we do get up to here, and also on SPX up to here, because if we pass this, then this would likely mean a squeeze or continuation upward from here, because the current head and shoulders pattern would be negated, and this would be a form of a bear trap or bear bait, as I like to call it. So something to note in terms of that. As of now, this is a bearish pattern in terms of this being a head and shoulders. And an interesting statistic that I found is every single Monday of the election week since 1996 has been green, which is pretty interesting. So we'll see what happens tomorrow, especially with this bounce that we have initially off of here. Again, if we do have that third retest of this line here in the future, whether it be end of this week or next week, this would probably show a lot of weakness, and you would want to watch this very closely, because if it breaks below, there could be a lot more downside. But as of now, it looks like it has bounced pretty strong off of this level, so it has provided a good support, and we'll see what Monday brings. As again, like I said, every Monday since 1996 has been a green Monday on the week of elections. So thought I'd share that with you guys today. Again, doesn't mean that this has to repeat this year, as you guys know, this year has been a very odd year overall in comparison to previous years, but interesting to look at historical references. Also, just a reminder, we still are below a lot of those heavy dark pool prints that we saw from last week and the previous week. Remember, we were seeing some like 4.8 billion here on November 2nd. This one was at 384.59. So just looking at the mini chart here, most of these prints, as I continue to go back through time here, this was last Wednesday, then if you go to last Tuesday, 2.9 billion, also pretty close to around that other level. Most of these are within this range over here, and as of now, as you can see, we are below those prints. So at the moment, this is a very bearish sentiment, that is, as long as we stay below those prints, because there's a potential that institutions were selling quite a bit as long as we stay below. That shows us confirmation. So continue to watch and see what price we sit at in the coming week, especially the next week, that is, to see if midterms can change anything or CPI can change anything, because as of now, it is more bearish sentiment based on these prints, which are a lot of prints. If you remember from our previous videos, it is not common to see these types of premium, like 4 billion plus 2.9 billion. If you go back to the Monday previously over here, 4.1 billion. Very rare to see these prints. I cannot stress that enough. So as long as we stay below, that is more bearish going into the future. Something else to note, we did bounce off of here on the daily chart. This level or trend line started on October 5th, and then you can see here we had this get rejected twice off of this trend line, and then it eventually broke through and used it, as you can see here, as a support on October 24th, and then we used it as a support yet again on November 3rd. So this is something that has been tested at least twice as of now as a support, and if we do test in the future, it's most likely to get weaker as time goes on. So something to watch for if we do retest it in the future, and if that head and shoulders pattern does play out, because if we do get below this, this would mean that this was a fake out to the upside of this, because this would be a breakout over here. If we did get below this, it would be a fake out, and then we would likely see some lower prices around this range over here, like 3,600 or so, probably get hit. So do watch this level, very pivotal, especially if there's a decisive break under, can lead to some more downside after that. But what I really want to talk about today is the VIX. You can see here that the VIX is in this pennant formation and has been all the way since November of last year. So it's already a year now that we've had this pennant going on. And this is very crucial because as of now, this did have a nice bounce so far off of the lower end of the pennant. And what's interesting is, despite the last few days of redness in the general market, we still have had the VIX get hammered to the downside. The past couple weeks, the VIX has just been red every single day, consistently going down, just getting shut down this entire time. So as of now, interesting to see this is getting a support around the lower end of the pennant. And also with that, if we look at the historical flow tab on Cheddar Flow, you can see here a lot of unusual call flow hitting the tape. This is over 1 million in premium filtered, only 2 puts, and these were much earlier in the week for the most part. So both of these puts are in the money as of now, although the calls on that end, a lot of these are out the money. You can see here 40 strike for 3.3 million in premium. This is a very unusual order. You can see over here 37.5 strike, 1.1 million, 35 strike earlier in the week for 4.0 million, and then a lot of 20s over here in mid 20s. So all of these are above 1 million in premium. Very uncommon to see this sheer amount of call flow in only a week for the VIX, and there's no surprise on that because if you look here, this thing is starting to get pretty oversold at the moment, and it's very weird, that is, to see this consistently get hammered to the downside despite the S&P 500 falling earlier this week, last week that is, after FOMC. So I'm certainly monitoring this, especially as we get around this like 22 to 24 range, because this is right at the lower end of the pennant. And last time it tested and went below the pennant, we did see a lot of call flow yet again back here, and then we consistently went up after that all the way up until 34 or so. So this is something that I'm watching at the moment and could bring some more downside to the S&P 500 in the future if we do start to pick up in terms of volatility, especially if the chart ends up playing out again like it has all the times in the past. Back here you can see we bounced off of it so many times, like back in January, we bounced back in April over here, and then also in late August. So something that I'm watching, definitely like to look at this. Again, technicals can sometimes be a bit harder on volatility, that is, but it has, like I said before, respected the levels we've seen in the past, as well as resistance levels up here around that like 34 to 38 range as a resistance. Something else to look at, we have QQQ here. This is an interesting lesson in the sense here. We have a channel, so the top of the channel here is the resistance and bottom is the support. Now this channel was broken to the upside. You can see here 3 times. We had the first time where it closed above but then gapped down below. This is critical because this was a fake out, the first fake out that we had, because we had it close above, especially on the daily candle here, above the channel, but then it gapped down the following day, which would negate the fact that we closed above the previous day. And then it tested again with the gap up and got rejected again for the second time and ended up closing below the channel. So that's 2 major rejections, showing that shows a lot of weakness above this 280 level, as you can see here on QQQ. And then for the third time during FOMC, we saw us get back above it for the third time here, and then it got rejected hard yet again. So price was very, very weak above this channel right here. And then we saw the eventual outcome, which ended up falling pretty hard after FOMC and continuation the following days. So as of now, it is retesting this channel again. Would be interesting to see if it got back into the channel. Would probably lead to a lot of chop. As of now, it looks like it's just a retest. Still possible for this to be a rejection. And then if you do see us get below this like 260 or so level, we're probably going to test a lower low in terms of this trend right now, which would be lower than 259. So I am watching for this, especially if it does retest, because this will weigh on the S&P 500 as well, which is what I personally mainly trade and what a lot of people like to reference for their own trading, whether that be in individual tickers or also like to trade SPX or the S&P 500 ETF. Now, as you guys know, I have been watching DXY, and I did tell you guys in the last video to watch this retest up here of the critical trend line that has been critical trend line since the middle of August, back here on August 11th when it started. And we did have that retest, and a major rejection ensued after that. So this could lead to a possible bid in the market, at least early week, going into midterms here on Tuesday because of this rejection. This is a pretty substantial rejection, and this could help aid the market, at least for this week at the moment. This is a very large red candle, and it's not very common to see such a large candle on DXY to the downside, as you can see from the past. Just the candles aren't as large as this, so this is a pretty substantial rejection. And again, when the dollar goes down, we do see some form of a bid in the market, so this could aid the market early this week. So I'm going to continue to monitor this and the VIX to give some more directional insight on the general market, and then overall this can help us to get a sense of our bias going forward.